Robinhood's venture fund, IPO, attracted 150,000 plus retail investors. Here's what you need to know. Robinhood just opened a backdoor to pre-IPO billions, and the SEC hasn't stopped it yet. The brokerage app that democratized stock trading is now doing the same thing for venture capital. Robinhood CEO Vlad Tenev announced that more than 150,000 retail investors have joined the company's newly launched venture fund. This isn't some theoretical product or press release promise. Actual people have already plowed money into it, gaining access to private companies that were previously locked behind institutional gates. Here's what makes this notable. The fund gives ordinary investors exposure to some of the most valuable private tech companies in the world. We're talking about OpenAI, the company behind ChatGPT, Stripe, the payment processor, valued at over $50 billion, Databricks, the data and AI platform, Oura, the health ring company. These are companies most retail investors could never touch before, because venture capital was exclusively for accredited investors with $200,000 in annual income or $1 million in net worth. Robinhood's venture fund fundamentally changed that equation. Now, anyone with a Robinhood account can theoretically get a piece of these deals. The speed at which 150,000 people signed up tells you something important. There's massive pent-up demand for this kind of access. On the surface, this looks like a win for everyday investors. Venture capital has historically been one of the biggest wealth-building mechanisms for the ultra-wealthy. The people who could get into early rounds of successful startups made outsized returns that compounded over decades. If retail investors can now participate, that seems like democratization working as intended. But here's where it gets complicated. Venture investing is fundamentally different from buying Apple stock. When you buy Apple, you're buying into a mature company with audited financials, regulatory oversight, and decades of operating history. When you buy into a venture fund, you're betting on companies that might not exist in 5 years. You're betting on founders, on market timing, on technology that hasn't been proven at scale. These are high-risk, illiquid bets that professional investors spend years learning how to evaluate. The regulatory question looming over this is massive. The SEC has been quietly concerned about retail access to private markets for a while now. There are rules designed to keep retail investors out of these deals, not out of spite, but because the SEC learned from decades of market history that retail investors tend to get hurt when they venture into unfamiliar territory. Yet Robinhood's structure appears to operate within the regulatory framework, at least for now. The company is using a legal mechanism called a fund, rather than direct securities offerings, which changes the compliance calculus significantly. The third layer of importance is precedent. If Robinhood pulls this off without SEC intervention, every other brokerage will follow. You'll see Fidelity, Charles Schwab, and E-Trade launching their own venture funds within months. That represents a seismic shift in how capital flows through the economy. The most obvious group is Robinhood's 23 million users. For people who've built wealth through stock trading and have been curious about venture capital, this is suddenly accessible. The barrier to entry just collapsed from needing $1 million to needing a Robinhood account. But it goes wider. This affects traditional venture capital firms who've profited from exclusivity. If returns get diluted because more capital chases the same deals, or if the best deal flow starts going to Robinhood instead, that's a genuine competitive threat. It also affects late-stage venture firms specifically, because the companies in Robinhood's fund, OpenAI, Stripe, Databricks, are already valued in the billions. Robinhood is essentially offering late-stage private equity with venture fund branding. The startup founders themselves are affected too. Suddenly, they have a new source of capital and pressure. Pressure to perform, because now they're answering to 150,000 retail shareholders who check their portfolio returns, not just a handful of institutional investors who understand the venture timeline. And regulators are watching closely. The SEC, FINRA, and other watchdogs now have to decide whether this model is acceptable or whether new guardrails are needed. That decision will ripple through the entire fintech sector. In the short term, watch for regulatory response. The SEC could greenlight this model, demand modifications, or attempt to restrict it. That's the biggest variable. Robinhood's executives have clearly calculated that current rules allow this, but regulatory interpretation can shift quickly, especially when it involves retail access to sophisticated investments. Expect rapid copycat offerings from competitors. If Robinhood gets even tacit regulatory permission, Fidelity and others will launch within months. The venture fund space will become crowded. The real test comes in returns. When these companies start exiting, either through IPOs or acquisitions, will retail investors actually make money? The companies in Robinhood's fund are late stage, which means valuations are high and upside is capped. A startup valued at $50 billion doesn't have room for the 100x returns earlier stage investors get. This matters because it will determine whether the promise of democratized venture capital actually delivers. Robinhood has found a legal avenue to offer something that previously seemed impossible: retail access to pre-IPO venture deals. That's either the future of democratized finance or a cautionary tale waiting to happen, depending on how it plays out. The 150,000 who've already joined are either early beneficiaries of a structural shift in capital markets or the first wave of retail investors learning an expensive lesson about venture risk. The regulatory clarity will come soon, and it'll determine whether this is a blueprint or a blip. Follow for daily AI and business updates.